Hello, everybody, and welcome to Before the Bell in 3D. This is week 44. My name is Jose Blasco, and today is October 30, 2023. I'm going to remove the introduction slide so I can say hello from the right side of the screen. How are you, everybody? It's good to see you. And I will also, before we begin, turn on our financial disclaimer so all of you have the chance to read it completely. I'm counting on you to do that. It's fairly short and it's important since we are dealing with financial markets. So we're getting together as always to prepare for the week ahead. We're gonna go over our five chosen markets, which are probably the most important markets in the world. Those are, let me be visual and bring our newsletter on the screen. Those are the S&P 500 markets, the crude oil, gold, US dollar, and Bitcoin. So we're going to be looking at those markets, understand the current situation, the current type of opportunities that may be available. And again, all of this is with the intention of hopefully helping you to focus, to be in tune with the market and what this week potentially has to offer. And therefore, just enjoy the markets and do a good job and seize the opportunity if available. Okay, that's the plan. I just mentioned our newsletter. In case you don't receive it, it's very simple. I'm going to share a QR code with you so you can easily subscribe. It's a free newsletter, and the information I'm about to share, you receive it in your email inbox. And in this sense, I believe that this should be useful in case you miss this live session or in general just for you to consult, okay, if needed. Anyway, so let's begin. We're going to start with the S&P 500. I'm going to do this analysis using real-time charts, even though I will go back and forth between our newsletter and the charts, real-time. And here is the S&P 500 in a daily time frame. And the first thing that we're going to do is that we're going to look at the climate. And what we can see with the climate is that we have a confirmed climate to the downside. Let me get rid of the QR code, which is covering auto climate here. Let me show that down climate, which is confirmed, thick red dot. That's the current market condition. So this market is more likely going to fall than going higher. That's what statistics suggest. But having said that, a normal thing to happen in the case of a down market is to fall in waves of 3 candles at a time, where we are currently in candle number 8 red dots, which is definitely much more than 3. It's almost 3 times. So we are in what we would say, or what we would call a statistically unsustainable situation, which doesn't mean it's not going to last longer. You can see that sometimes it will. Because again, statistics are a very powerful reference, but just a reference, not a guarantee. So the market could certainly keep going down, especially since we do not have green UFOs until we get much lower in price, until we get to 4039.5. There are no buy on field orders, which that's the other dimension I need to mention, UFO, right? On field orders. Okay, so we don't have buy on field orders until 4039, where the current price of the S&P is 4162. So it could certainly keep going down, but I would say that it's very possible that at any moment in time, maybe tomorrow, maybe later today, we see a green UFO show up around the current price. And from there, the market starts moving higher from here until the next red UFO, okay? And then from there, it may go back down again. But that move to the upside, I would say, is likely going to happen. And I would say that because 8 is more than 3, way more than 3. So statistically speaking, to keep going down, it's unlikely. Definitely not impossible, but unlikely, yes, okay? So this is what we can see with auto climate, which is dimension number 1. On the newsletter, you can see your rain. We have been in that rainy climate, this down market for 8 candles. A normal thing to happen is 3. So we also saw sell on field orders located at 4213 and buy on field orders located at 4039.5. And finally, the last dimension for us to explore, dimension number 3, it's expected moves, speed of movement that is expected, and we extract that information from options prices. Actually, we don't get that information from looking at the chart. We actually look at the options prices, and then what we do is that we perform a, let's call it a reverse engineering process, looking at the options pricing models, given the fact that we know the price because it's real time. So then we roll back that options pricing model, and we conclude that for those prices to trade at the current price, for those options to trade at the current price, the move that is expected in a 1 standard deviation of the cases is 53 points a day, either up or down, 117 points a week, either up or down, 244 points a month, either up or down. So this is the expected move, which gives us a great measurement of risk if you think of volatility as risk, gives us a great measurement of opportunity if, as a trader, you are more advanced and you are looking at volatility as a little bit of spice in your trading life. Okay, so anyway, this is where we are with the S&P. Here's the picture of the chart that you see on the newsletter, but we saw it real time. So let's move to the second market now, which is crude oil. I'm going to click on crude oil 1, 2, and 3. Here are the UFOs on crude oil, and we can see how price came into the red UFO recently and is now going down from the red UFO. There is a green UFO right below, so buy and sell orders. This is one of the dimensions. Buy orders 85.44, sorry, sell orders 85.44, buy orders 80.87. And from a climate point of view, take a look. This climate is unconfirmed. So we have a thin dot. Thin dot, even though it's blue, it tells you that there is a little bit of a directional component to the upside. But to be honest, it's quite visual. This market is going nowhere. There is not a clear direction. So there is not a clear climate. And again, the way the analysis is carried out by our artificial intelligence is way more complex. But bottom line, it's the climate is not confirmed. So trading is a little bit of a and that's what it is. So climate, notice how we don't have a sun, we don't have the rain, we have the cloud and the sun, not confirmed. Little bit of sun, but not confirmed. We are in that stage for one candle. If it was sunny, if it was an up climate, you would expect waves of 7 candles at a time. That would be a normal thing to happen, 1 standard deviation. But at this moment in time, it's not confirmed. So I would say, at least if you trade like I do, everybody's different, of course. Again, waiting in my case, it's my choice in this time frame. Of course, I am applying auto climate to the daily time frame. You may apply it to the 15-minute time frame, and then you get a totally different market condition and climate, and it's a 2 out of 5. So go ahead and trade. But again, on the daily time frame, okay, this is what we have, which is the time frame I use for this analysis. So sell orders 85.44, buy orders 80.87. Speed of movement out of analyzing options on crude oil futures 2.49 points a day, or 5.48 points a week, or 11.40 points a month. This is what is expected in the case of crude oil. Next market to analyze is going to be gold futures. So let's go for the chart. Let's go for the chart. I see a comment from Mustafa. Hello, Mustafa. How are you, my friend? Good to see your comment. I almost missed you. I was focusing on the chart and I didn't realize that you type on the chat box. Thanks for that, Mustafa. It's a pleasure. So gold is the next market, and as we load gold here, so here are the UFOs, 1, 2, 3. Here we go. So what type of climate do we have? Well, a very extended climate with a blue dot. Is been running for 15 days. A normal thing to happen is 6. Okay, so we have another case of a market which is overextended, statistically speaking. It's been in that climate for too long. And to be honest, visually speaking, we can see that this is such a massive impulse with no rest, no correction. Typically, that kind of thing is not sustainable. And we can see that this is the case. But, putting on the side subjective observations, we now have objective numbers, 15 out of 6. That's the key. So now, if this market keeps rallying a little more, it's going to hit a big pile of sell orders located at 2028.3. And from there, the expectation would be for gold to go down. Definitely, that would be a change of climate. Change of climate to the downside typically would be 4 candles. And from there, we hit 1944 and probably go back up. And typically, that would be 6 candles at a time, okay, if we go back to an up climate. So summary of what I just said. We are in a sunny climate situation that it has been running for 15 candles. The normal thing is 6, so we are definitely late to the party if you want to be a buyer. If you want to be aggressive and sell, 2028.3 is where the sell-on floors are. 1944.5 is where the buy on field orders are, and the speed of movement is expected to be at a rate of 20 points a day, 45 points a week, 93 points a month. This is extracted from options on gold futures. Now, I'm looking at different markets here. Again, some of you may be very much into having trained yourself, taking multiple trading courses. Some of you in an early stage of learning trading. So just in case this helps, I am highlighting on the screen a QR code and a URL for you to go to our site, explore the various offer, the diverse offer that we have when it comes to courses and so on. And if there is anything that you need, you can easily register for it and enjoy. Next market to be analyzed is the US dollar index, tremendously important market since most products worldwide, 80% roughly of products that trade in the world are priced in US dollars. So when the dollar goes up or down, this has major impacts. Okay. Last week, we talked about the on-field orders located at this price point, and these buy orders created a beautiful move. We also had sell orders, and you can see how now the dollar is trying to go down. But even though it's trying to go down, careful, because we're still in a confirmed climate to the upside. So we don't have confirmation yet that is going in the opposite direction. We have been in this climate for 4 candles. A normal thing to happen is 6. So we may have a little bit of a fight and even maybe a little bit of an extra push before we have a change of direction. Okay, so this could happen, and again, our tools hopefully will help with you staying focused and mechanical and objective at your analysis instead of having a little bit of an anticipated guess. Instead, our tools allow you to rely on evidence, which is not a guarantee, but definitely much more powerful than a guess, isn't it? So anyway, so what do we have with the dollar index? Up market, 4 out of 6. Sell on field orders, nothing. Okay, nothing, no red. Buy on field orders located at 104.24. So let's take a look at our newsletter. Status, sunny, been like that for 4 candles. A normal thing to happen is 6. No sell orders, and the buy orders located at 104.245. Okay. Speed of movement to be expected to be at a rate of 0.48 points a day, 1 plus point a week, 2 plus points per month. That is extracted by looking at options on currencies, and therefore that will be the expectation for the dollar index. Okay. And the last market that we're going to analyze is another currency, in this case a cryptocurrency, but this is not a decentralized market. This is a currency futures. So this is ICE Coindex Bitcoin futures. So this is one of the Bitcoin contracts that trade in the ICE exchange. To be more specific, ICE futures Singapore, not ICE Europe or ICE US, but ICE futures Singapore. And this is a very interesting contract that is currently showing Bitcoin to be in an up climate situation that has been running for 10 candles, where a normal thing to happen is 4. So you can see that this week, many markets, it's not normal to be honest, because statistics are there to set what is normality, and normal is what tends to happen most of the times. But this week, you can see how many markets are exceeding what a normal probability is. And that has a lot to do with the fact that many of those markets work in a way that is correlated or inversely correlated, or there are definitely some implications. Okay, for example, the fact that Bitcoin is priced in US dollars means that if the US dollar does a move, probably the Bitcoin feels it in one way or another, isn't it? So we have a little bit of this unlikely behavior that we find in multiple markets this week, given the fact that many of those markets work in tandem. So 10 out of 4, that's the current condition. Sell on field orders are located a little higher, 35,760, and buy on field orders, very interesting, because our patented technology identifies all that area where Bitcoin is inside as an area with plenty of buy orders. Now, the problem is that the zone is so wide that if you were to put a stop below 30,300, you are taking a pretty big risk. Of course, if you do it with a small size, nothing wrong with that, I guess, depending on your trading plans. But yeah, we are in a price zone where a move has not happened yet, but the technology has identified that there are buy orders. So we may have a push. Now, of course, the push may hit the sell orders, bring it back down, and then from there, we do get the real move. Okay, so now the move down I mentioned, maybe 4 days. That would be a normal thing to happen right here. Okay, and from there we get another wave to the upside. I would not be surprised. I've seen it a million times. But again, we don't want to gamble with it. We certainly want to manage risk. You want to have a plan around it, calculate your size, and do things in a way that are proper. Okay. So, summary. And by the way, I'm just noticing I was hiding the stats with the QR code. Sorry about that. But anyway, I'm showing the stats again. So sunny climate in the case of Bitcoin, it's been like that for 9 candles. A normal thing to happen is 4. Sell on field orders located at 32,492. Buy orders located at 35,000. So notice how there is an overlap, and it's because what I just mentioned, that buy orders have been identified at the current price already, even though a move has not happened yet. So pretty interesting setup. Anyway, speed of movement expected to be at 1,000 plus points a day, 2,500 plus points a week, 5,000 plus points a month. This is the expectation for the Bitcoin. Great increase of volatility if you compare with the volatility identified in the prior weeks, which of course has a lot to do with the recent moves on Bitcoin, where it's getting many people excited and getting very much into speculative mode with options, and those options are becoming pricier, representing a larger expected move. Okay, so that's exciting, but again, remember, we've been in this climate for 9 candles. There are sell orders right around the corner, so the move actually may be to the downside until it hits the buy orders and then go back up again, right? So again, when it comes to excitement, it's a great word, but in the world of cryptocurrencies, often you find less educated investors. And I don't mean this negatively. I'm just saying that many people that never traded in their life, they got into trading because of cryptocurrencies, and therefore they're lacking a lot of education and expertise, and they get very excited, very emotionally excited, very much of a believer of a technology instead of analyzing markets in a way that is objective. So again, nothing against digital assets. We even have technology and courses on that and everything else. So please don't get me wrong. But I do need to mention that careful with excitement, because statistics suggest caution to the upside, because 9 is more than 4, isn't it? Anyway, so we are about to concluding the session. What do we do as a company if this is the first time that you see us? Well, we produce trading technology which is innovative, intelligent, and patented. And we also, together with the technology, we provide a lot of product training, coaching, education, all sorts of things to help you master trading and the use of the tools, so you can do a great job when you trade. Okay, so we welcome you to go take a look at our website if you haven't yet, and enjoy what we have there, and hopefully you become one of our clients. And in that case, happy to help. Shoot an email to our support team or to myself, and we're here for you. Economic calendar, busy week. Okay, many items. Look, if I scroll from up to down, many items, many items, red color. So Monday we started, with some key news in China and also Japan with interest rates. Big thing. All of this already happened earlier in the day, but big things. Then into tomorrow, GDP in Europe, unemployment numbers in New Zealand. So again, big things. Following day, unemployment change in the US, Fed interest rate decision, probably the hottest day of the month, right, on Wednesday, monetary policy and so on. Then on Thursday, we got the same thing with the UK, as well as CPI in Switzerland. Big thing, isn't it? Big news as well in China. And then we're getting with unemployment numbers in the US at the end of the week on Friday, like every first Friday of the month, unemployment number. So, wow, volatility every day of the week is to be expected. Let's have fun, but most importantly, let's be professional, let's be safe, let's manage the risk, and definitely that's our approach. Hopefully that's yours as well. Before we conclude the session for today, I just wanted to quickly point at our book, Always Makes Us Proud. We got 3 designations. Number 1, new release in Amazon for our book. It's a book that teaches you how to trade applicable to all assets, even though we use Forex as an example. Why? Because Forex is foreign exchange, which is currencies, and everything you trade is currencies. Even if you trade stocks and you buy McDonald's shares are priced in US dollars, which is a currency. So again, this book helps you to trade everything, including the Forex markets, and therefore we welcome you to go take a look, knowing that if you purchase our book, which it's an affordable cost, I would say, just like a majority of books. So you also get access with the book to one of our courses, as well as 3 months of access to our patented technology. So enjoy, just like I have enjoyed spending this time with you guys in this live session. And before we conclude, I just wanted to mention as well that you take a look at your inbox, because we have been sending, or we will be sending, emails notifying you of changes that apply to our live streams and certain aspects of how we coach and support our clients, because we are about to release, and let's call it an update, an improvement on the way we do certain things. So make sure that you have your emails under control. Nothing is on the spam folder, because you will be receiving notifications from us starting today, actually. Okay, so you guys take care. See you soon. Always a pleasure to be part of this, and I thank you very much for joining me. You take care. Trade safe, trade well. See you in another one. Take care, everybody.